we as attorneys are governed by the rules, the New York Rules of Professional Conduct. Those are our standards. That's essentially our guidebook. And They became effective in 2009, and they are the primary standard for measuring an attorney's conduct or misconduct. So if there's any allegation or issue with regards to misconduct, you would reflect that in the rules as a violation. And where does that start? That professional misconduct, you'll see that with the filing of a grievance complaint. Hopefully, the exhibit that I have in your materials, which is the grievance complaint. Hopefully that is the first time you're actually seeing a grievance complaint, but it's good to look at it and take a look and see what exactly they're looking for in terms of the grievance complaint. Let's see here. Having some difficulty forwarding or going forward. Maybe Diana, you could help me with. Okay, here we go. Um, okay, so the first thing we should look at is actually the complaint because that is really where it all starts. The complaint itself, it must be in writing, and must show the act of professional misconduct. If it does not reflect an act of professional misconduct, the grievance committee will screen it out and dismiss it. Who can file a complaint? Anybody can file a complaint. It does not have to be the client. And the complaint form, as you can see in the exhibit, it's not burdensome. You can see that it just reflects what the complainant information is, who the attorney complained of is, the date you hired the attorney, contact with any other agencies, and then it just has you recite the specific allegations that may have given rise to the professional misconduct. Again, if it doesn't reflect an act of professional misconduct as deemed by the grievance committee, it will be dismissed. If not, it will proceed accordingly. And the reason why that this process is made easy, the complaint itself, the form itself is very easy to read, to complete by the complainant. It doesn't even need to be verified or notarized. The thinking of this is that the grievance committee wants people to file complaints or feel comfortable filing complaints if they feel that there was some wrongdoing on the part of their attorney. The legal profession is self-governed. It relies on attorneys and the public to report potential professional misconduct. There's no ethics sheriff, so you know, the only way that someone is going to, or the grievance committee is going to become aware of this is the filing of these complaints. So that's why these complaints are encouraged. And again, the grievance committee will screen them. So on to the top 10 ways. Our first way to avoid a grievance complaint is number one, know your client. I can't stress this enough. Perform client due diligence. Who are you representing? Are you representing an individual, trust, estate, or entity? You would need to know specifically who this person is. Are they an individual who is entering into their first house purchase, or are they a developer who is aware of what goes on at closings? What's their level of understanding in this transaction? You need to know that because that's going to assist you in being and assisting your client and completing the closing and actually just giving them a better result and informing them along the way. So what you need to do at your initial client intake is to gather as much information as you can. If you are dealing with an individual, the good, bad, or ugly, you need to know who these people are. It would be a good idea to do a Google search, find out about them, gather identification for them. If you're dealing with a trust, review the trust ahead of time, know who the trustees are, know what the powers the trustees have under that trust. If you're dealing with an estate, you want to look at the letters, you want to see who the fiduciary is, what powers they have as well. And lastly, the entity, you want to know if it's a corporation, you want to review the bylaws. LLC, you want to review the formation documents and the operating agreement, know who the members are, know which member or members are authorized to bind the LLC, and also what powers those members have. The applicable rule here is Rule 1.1, which requires a lawyer to provide competent representation to a client. So that competency starts with knowing who your client is. So, when you're dealing with an LLC, of course, LLC law, section 417, you must have an operating agreement that must be created within 90 days of filing the articles of organization. That's a document that's going to reflect who the members are and what powers those members have. We, as a title company, are going to ask for a copy of that operating agreement. It's probably one of the most important documents and probably one of the most overlooked documents. A lot of times when these LLCs are formed, you have your articles of organization, that once that's filed, the operating agreement, which is usually part of the kit or the forms that come when the LLC is formed, uh, it's usually not completed. And that's a mistake because, of course, pursuant to that section, it has to be completed or prepared within 90 days. So make sure your client, if you're representing an LLC, make sure they have that operating agreement. If they don't, make sure they create one, sign it. As I said, we are going to be looking for a copy of that because we need to review that. Corporation must adopt bylaws at their organizational meeting. So again, we would look at those bylaws as well. Confirm power authority by reviewing the books. And of course, you need resolutions at closing, which will delineate what powers the member has that's going to be at the closing, or if there's an authorized signatory who's going to be signing the documents. Today, we have the enhanced LLC disclosure requirements in New York, which create a recording requirement for deeds conveying title to residential real property containing 1 to 4 family dwelling units wherein the grantor or grantee is an LLC. So that in and of itself is requiring attorneys to gather and provide that information so that that form, that addendum can be filled out and you can record that deed. Let's see. Pertinent rule of knowing your client is Rule 1.13. The entity as a client, when a lawyer employed or retained by an organization is dealing with the organization's directors, officers, employees, members, shareholders, or other constituents, and it appears that the organization's interests may differ from those of the constituents with whom the lawyer is dealing, that lawyer shall explain that that lawyer is the lawyer for the organization and not for any of the constituents. If you're representing an entity, your client is that entity, that LLC, that corporation. It is not an individual officer or an employee. You need to make sure that that officer or employee or member is aware of that. And you must always act in the best interest of the company. Number 2, just say no when it doesn't seem right. And this is what I call the bad gut feeling. This is when you have a prospective client that comes in and for some reason or another, it does not seem right to you. If you have that feeling, more likely than not, it's for a reason. Inquire further into the matter. or the individual or corporation. Find out why you're feeling this way. Is there a red flag here? Decline the representation in a clear, decisive manner if after your investigation you feel that this transaction or client is not right for you. Withdraw from representation as permissible. And Rule 1.16 states a lawyer must decline or withdraw from representation if the client demands that the lawyer engage in conduct that is illegal or a violation of the rules of conduct. One red flag is if from the get-go, if the client is trying to negotiate your fee, that probably is indicating that you're going to have some type of an issue come closing. But a bigger red flag is when you have a client who's asking you to maybe deposit money uh, ahead of a closing. Just be wary of that as well, because you need to find out specifically where those funds are coming from in the context of a real estate transaction. If these are funds that are from a sale or from an account that's being transferred to your account, you want to know that this is coming from an institution within the United States. If it's outside, international, red flag should be there. You want to know where this money is coming from. You do not want to inadvertently have your money laundered through your IOLA account because fraudsters or bad actors they're aware of IOLA accounts, and IOLA accounts, as you may know, they don't have the same mandatory reporting requirements as would any other account. So you want to be very wary when you are taking money at the outset of a representation of a client. Um, Other applicable rules, Rule 1.2, which states a lawyer shall not counsel a client to engage or assist a client in conduct that a lawyer knows is illegal or fraudulent. Rule 4.1, in the course of representing a client, a lawyer shall not knowingly make a false statement of fact or law to a third person. And 8.4, which states a lawyer shall not engage in conduct involving dishonesty, fraud, deceit, or misrepresentation. So again, you want to make sure that you have made your investigation as to this client. You feel that everything is uh, up to snuff, that there's no issues, no red flags with regards to where money is coming from, who this client is, and if you feel after investigation that you are comfortable with this representation, yes, go forward. But if there is any issue or any feeling that that makes you pause, gives you pause, then of course you have the ability to withdraw. Put it in writing. Number three, retainer agreements. They're required in certain manners. If the legal fee to be charged is expected to be $3,000 or greater, a written letter of engagement or retainer agreement is required. The letter must detail the scope of the legal services, explanation of fees, of right to arbitrate, and the lawyer shall communicate to a client the scope of the representation, the basis or rate of the fee and expenses for which the client will be responsible. That's Rule 1.5, which really is the catch-all provision. So if the legal fee is expected to be $3,000 or greater, yes, you pursuant to New York Code rules and regulations, you have to have that letter of engagement or retainer agreement. But if it's below, Rule 1.5 comes into play, and it talks about communicating to that client the basis, the rate of the fee. Regardless of the amount to be charged, I always recommend retainer agreements because retainer agreements can specifically state what you are going to do and what you are not going to do. It is a written communication which is either acknowledged as received or signed, um, and specifically states what the legal services are. An attorney is not liable for failing to act outside the scope of a written retainer agreement. That's the Milbank case, where a student, a med student, was expelled from college, and he went to the Milbank law firm, who fortunately had a retainer agreement signed, which specifically stated, all we're going to do is review this matter and give you your options. We're not going to bring any action for the school to reconsider or negotiate anything with them. So essentially, when this matter was brought by the student, this malpractice action, the court found for the law firm, stating that the retainer agreement was clear and concise, specifically stated what they were going to do and what they were not going to do as attorneys. So they're not bringing any action, or negotiating the matter for reconsideration at the college. Uh, that was outside the scope of the written retainer agreement, and the attorneys were not liable. Always be learning. Rule 1.1, that's competence. A lawyer should provide competent representation to a client. That representation requires the legal knowledge, skill, thoroughness, and preparation reasonably necessary for the representation. And the lawyer shall not intentionally fail to seek objectives of the client through reasonably available means. A comment to the rules, to that specific rule, states that the attorney should keep abreast of the benefits and risks associated with technology the lawyer uses to provide services to clients or to store or transmit confidential information. So in this context, we have, especially in our field, we use emails, we use technology, all types of technology. Now we have AI and generative AI that some attorneys, I'm sure, use. We need to make sure that we are not only providing competent representation, that we know how to use these. And if our use in these is going to violate any of the rules of professional conduct, we need to cease using those means. But we need to take also reasonable measures to safeguard our clients' information and provide competent representation. So, for instance, if someone is using AI to create a form, you want to make sure that you are communicating with your client to advise them that you will be using this form of AI. You want to make sure you're safeguarding the information so that the information of your client remains confidential, and you want to use it in a competent way. AI that's being used, it doesn't necessarily mean that it's 100% correct. So you want to make sure that the information that is being fed back is true and accurate. Number 5, watch your wires. So important these days, because there's so many issues that come up with wires. And in this day, wires are being used, it almost feels exclusively. I'm almost thinking that gone are the days when the buyer would bring a bank check to the closing for the balance that's due to seller. It seems like wires are being used more and more, and sometimes even the seller's attorneys don't even come to the closing, and everything is sent in escrow, and they're just kind of wait back until they receive the wire. So with this increase in wires will come an increase of potential issues. So you want to make sure that you read the bank wire transfer agreement. Those are those words on the back of the form, those tiny words on the back of the form, whether it's at Citibank, Chase, or Wells, or wherever you're sending your wire. Um, or if you're reviewing something online and you're clicking accept, those notices are important. So you want to make sure you're aware of that, because essentially they are limiting their responsibility in those agreements. They're essentially saying they're not liable if there's any delay in the wires, that they can exclusively rely on the information that uh, the sender is providing to them, so that if there's any issue and it's sent to a wrong party, they are not liable for that error or that mistake. Um, so when you are sending a wire, you want to make sure, especially when you're sending mortgage payoffs, you want to make sure that the information is correct. You want to add the loan account number of the borrower, make sure the number is correct. You want to make sure that the recipient bank on your wire that is correct, the account number is correct, the ABA number is correct, because not only is the bank saying they're not liable for any errors that you make, uh, the the Fed is also saying the same thing. Regulation J, there's that regulation is in your materials as well. Essentially says that even even if there's an error in the number, uh, um, or an error in the name of the bank, that they're not responsible. So, for instance, if you put an ABA number in and you put it's supposed to go to Chase Bank and that ABA number is Citibank, um, they're not responsible for that if they complete that wire. Same thing with the account number. For instance, if you put John Smith on your uh, wire request, and the account number that you had entered is for a Jane Doe, the bank again and the Fed are not responsible for any errors in that. So again, you want to make sure that that information is correct. A lot of times, I may ask a second person to review them to make sure that I'm not transposing that information incorrectly. Again, and you want to verify the verbally the wire instructions before sending any wires. I verify them verbally, even if I get my wiring instructions by FedEx or mail. I don't it's important for you to do that. In fact, if there is ever any claim that you make, or if there's any issues where a claim is made for a professional responsibility on your policy, they are probably going to ask you, did you verbally verify the wiring instructions? So you want to make sure you can answer that in the affirmative. So again, make sure that you verify verbally the wire instructions, and don't go just by the number that is on the wire instructions. Check it, go look, whether you're going online, look at the website, or whether you've dealt with the same firm in the past that you're sending the wire to. Make sure that you have the correct number that you're calling, verify the wire instructions, get the name of the person that you're speaking to over there at that firm or that office before sending that wire out. Cyber attacks involving fraudulent communications appearing to come from a legitimate source and attempt to obtain personal information. That's what we call phishing. And phishing, there's so much of that going on today. I'm sure you will get hit with phishing attempts a number of times in one day. I must, I mean, we all get them. It's important for you to identify them and notify your IT department, or if it appears that it's coming from somebody's email account, um, I would reach out to that attorney or office and tell them you may have a potential person that's hacked into your email. But these are situations where it's coming from some uh, outside source. It appears to be legitimate, and they want you to click on something, whether it's a document or a website or a link, in which they will provide or try to obtain your login credentials. And then once they have that, they can install malware or um, get personal or confidential information with regards to matters you're handling or even bank accounts that you have. Today, um, since these phishing attacks are just evolving and evolving, sometimes I've seen ones where there are phishing attempts in captcha prompts. Captcha prompts are those things where you'll see pictures and you have to click on where you see a motorcycle or where you see buses. So be careful when you're verifying on a captcha, because if something additional pops up where they're asking for some type of login credentials or system commands, you want to be very wary of that, because that is a phishing attempt, and they're trying to get your information. A lot of times, these fraudsters are going to try and use um, what's going on in the world at the time. This is something that came up during the pandemic, and they'll be constantly evolving. You may see something, since uh, the federal real estate reporting rules around the corner with FinCEN, you may see something with that comes to your email and asking you to click on something. Uh, be very wary. Make sure that you see that as a red flag. They all appear to be legitimate. These fraudsters, this is their job. They are ever evolving and ever knowledgeable about these things. There was a day when you'd be able to easily um, point out these attacks by misspellings or improper grammar. But even fraudsters today are using AI to perfect their emails. So you want to make sure that you know who this is coming from and independently verify the source of an email before clicking on anything. And I know that's very difficult because, sometimes you'll get a shared folder, Google Docs or DocShare, uh, or something from a bank if you're handling settlement. Just before you click, contact them and verify that they are sending you this email, because it is an attempt in many instances that they're trying to get that information. Even Zoom calls could be perpetuated by fraudsters. So you want to make sure of that as well. If you're not scheduled for any type of Zoom meeting, or if you don't know the sender of the Zoom meeting, do not click on it. So be very wary of that. 91% of all cyber attacks begin with phishing emails. So you want to make sure you're on the alert for that. Most reports of fraud in 2023 involved business email account compromise. And just last year, FBI reported approximately $2.9 billion in losses due to business email account compromise. This is, again, this starts primarily or mostly with these phishing attempts. So you want to make sure that you have your guard up with regards to these emails. Attackers will access an email account and assume the identity of the attorney, broker, or party to the transaction and send new wire instructions to the attacker's account. This has been done a number of times. These fraudsters will in some way access the email account. Usually it's through the business email account compromise, and they will troll the emails and they will find out when the closing is just about to happen. And that's when they send that email with a change in wire instructions. And of course, those wire instructions go to account that the fraudsters have. So you want to be careful of that as well. Use safe email practices. Always use a secured Wi-Fi connection. Use strong passwords for your email, something that uses both upper and lower cases, a special symbol, numbers. Just make sure that it's something that, isn't easy. You don't want lawyer number one, and you certainly don't want password to be your password. Monitor your email account. Review your sent file for all emails so that in that instance, if somebody does hack into your account, you can see what's coming out of your email account. If somebody is maybe, sending an email from your account, you can see that in your sent file. So be wary of that as well. Update your operating systems and antivirus programs. Verify sender's email address. Call to confirm that the email is genuine. And I also add a fraud notice to your emails. I also add these notices to the retainer agreement, which is another big reason why you should have a retainer agreement, because you want to make sure that your client is aware that your wire instructions do not change. And if you anticipate your client wiring to you at some point, it may be a good idea at your initial meeting to give those wire instructions to them and tell them right there that these instructions are the ones you're going to use. They're not going to change. And even put another layer on it and say, contact me before sending anything and speak directly to me. Regardless, do not listen to any emails that are coming from me with regards to wire instructions. Contact me directly. Communication is the key. A lawyer must promptly inform the client of material developments in the matter, keep the client reasonably informed about the status of the matter, and promptly comply with the client's reasonable request for information. And the client shall explain the matter to the extent reasonably necessary to permit the client to make informed decisions regarding the representation. And required communication and disclosure to your client goes as far as informing them of your mistakes. That is a difficult call to make, but it does happen, especially when you're dealing with the previous example of wire fraud. Time is key. So you need to make sure you make your client aware if there was some fraud with regards to wires, you need to contact your client, and that would come right after you contact the involved banks with regards to wire fraud. Make sure you respond to phone calls, emails, and other correspondence from fellow attorneys, as well as your client, of course. Be careful of, when using emails, the reply all icon. You want to make sure you know who you're replying back to. A lot of times you will have emails and there may be 10 people on the email chains. You want to make sure you know who is on this email chain. If you don't know who they are or they're not pertinent to the transaction, keep it to the person that you know. You're going to be safer that way in terms of replying to that email. Deal with conflicts. An attorney must maintain independent judgment at all times. if you are representing more than one party at the closing table, dual representation should be practiced sparingly and only when it's clear that neither party will suffer any disadvantage from it. So this goes to conflict. Of course, any representation of more than one party, um, you would need informed consent from the client. I don't recommend doing that unless it is a permitted, uh, definitely clear permitted um, representation. For instance, situations where you're not negotiating with yourself. Those are situations which would be permitted. Number 8, don't show up late for a date. You have to watch your deadlines, mortgage contingency, inspection contingency, time of the essence deadlines, rate lock expiration dates should be calendared so not to be missed. And the applicable rule is 1.3, which is diligence. A lawyer shall not neglect a legal matter entrusted to the lawyer. These dates have consequences, so you want to make sure that they are not missed and calendar them in more than one location, whether it is in your phone. Also have like maybe a desk calendar or a journal, which will reflect these dates so that they are not missed. Uh, Again, retainer agreements are so important because you can put an obligation in there to your client. Essentially saying that they need to provide you with information on the status of their loan, because you need to know that. You also can put in information regarding inspections, the importance of inspections, um, and also advising you of any rate lock expiration dates. These will assist you in better representing your client so that they won't have any issues going forward and won't affect the actual closing. 9, take account of your trust account. That the pertinent rule is Rule 1.15. Attorney must maintain escrow account records for 7 years. They have to have special words: attorney special account, attorney trust account, attorney escrow account. And if it is an IOLA account, an additional designation is required. That's an interest on lawyer's account. The interest earned on the account goes to the IOLA Fund of New York State. Both parties must be informed of the use of the IOLA account, and that goes in your contract. And if the IOLA account, if the attorney receives qualified funds, which is usually a small amount held for a short period of time, like your normal or usual residential transaction, real estate transaction, that would be qualified funds in most instances, and you would have to use the IOLA account. Make sure if you're depositing any money in your account, make sure that it is cleared. Cleared doesn't necessarily equate to available. A bank may say, oh, your funds are available. That does not mean that the funds are cleared, because if a check for some reason is fraudulent or deemed fraudulent, those monies will come back out of your account. So if you are depositing a check and then somebody's asking you to wire out, those funds would be out of your account. The bank is, in that instance, would be providing a provisional credit to your account. And if it is later deemed that it was a fraudulent check, that's going to be a major issue because they need to take those funds out, which is going to be likely other clients' funds. So when you are sending a wire, make sure not only that the bank is saying it's available, make sure you're aware that they are cleared. Any checks are cleared, that the funds are truly available. No provisional credit is being provided by the bank, and a wire or even a check can be cut from that account at that time. Only an attorney admitted in New York can be a signatory on an escrow account. Paralegals, bookkeepers, office managers cannot be signatories. A signatory is responsible for the acts of co-signatories if a reasonable review of the records would have disclosed that conversion. The Galasso case, the court said there that attorneys must maintain appropriate vigilance over their escrow accounts. Uh, you have to protect your account from errors. It's your responsibility as the signatory to reconcile the account, review the bank statements via phone or online. The Galasso case was an instance where uh, the attorney Galasso had hired his brother as a bookkeeper, and unbeknownst to attorney Galasso, the brother had essentially stolen over $4 million in client funds over the years. Um, and um, and what he had done, the brother, the bookkeeper, had prepared fake bank statements and had the actual bank statements uh, sent to a PO box, which he had control over. So he went about to conceal this fraud in the best way he possibly could. Um, but notwithstanding that, the court said you should have reviewed your account periodically. If you did, if you were vigilant over your escrow account, you would have found out that there was this uh, conversion going on, and you would have been able to mitigate the damages of the clients. So make sure you are aware of that. Make sure that you reconcile your account periodically. Um, Now these days we can do this stuff online. We can see what's in and what's coming out of the account. Don't rely on just your checkbooks or your programs, your escrow programs, trust account programs. Use different color checks for escrow in your operating account so that there's no mix-up. Uh, Dangers of smartphones and remote deposit. Um, that's uh, that's an issue when people, fraudsters may get a copy of your check, and they may fraudulently, put a different payee on it, and they will deposit it remotely. You want to make sure that, again, be vigilant over your account. And if you see that there is a check that's been issued on your account, make sure you go to your bank and notify your bank immediately with regards to that. Treat your checks almost as cash. Keep them in your possession until you're actually delivering those checks, because as I previously indicated, an image of that check can be modified, and you can have a fraud happen or take place with regards to a deposit. One way you can combat these issues is, and you want to investigate this with your bank, you can talk to them about a positive pay system or a reverse positive pay system. And essentially, with positive pay, you, the client, provide a check to the bank, and they match the check number, dollar amount, and payee with that check, with that list you're providing to them. A reverse positive pay, essentially, the bank is providing that information to you or that list to you, and you clear or approve the checks that are on that list. Lastly,
Hello, I just want to interrupt you for one moment.
sure.
Before we get to reason number 10, I wanted to give everyone the course code. The course code is ethics. The course code is ethics.
Thank you, Diana. So lastly, just be careful out there. Become familiar with the rules. We don't have to know everything that is in the rules, but become familiar with each section. And if there is an issue or a gut feeling or if you feel something's not right, it usually is not right, and you want to investigate that further. And that's when you explore the rules further. You can consult with um, your local ethics committee, reach out to the New York State Bar Association. You can send an email to me. A lot of you out there have my email already, but rgiorno@judicialtitle.com. Feel free to send me any issues, any questions that you have. Just be careful of any red flags and know yourself. If you don't feel comfortable with something, make sure that you pause and get all the information. A lot of the fraud that's going out there, um, things are done or they're pushing you to get things done quickly and make a rash decision. So you want to make sure that you're able to step back, gather the information, and make an informed decision because that's going to provide competent representation to your client as well as protect yourself when you're representing someone in a real estate transaction. Self-awareness is the greatest tool that an attorney can have. So just make sure that if you do have an issue or a matter that you don't feel right with, just explore it further. And that being said, I think we'll leave the balance of the time to answer any questions. But first, I just want to thank you for um, joining us in this presentation. We hope you join us with future presentations. And I wish everyone a very happy Thanksgiving.
Okay. The only question I had was somebody wanted to clarify the attorney's responsibility when they're representing a purchaser and the lender's attorney is sending the wire, what their responsibility is for oversight, even if they're not directly involved with the wire.
When if somebody's representing the purchaser, you
But
said?
yes, but the lender is the one doing all of the wiring, what their responsibility is as far as oversight of the funds.
I, you know, when in my role as a bank attorney, I always verify that information as well, even though somebody's just providing those wire instructions to me, because it's a way to avoid a headache. I don't personally rely on something telling me already that they verified the wire instructions. I do those myself. Anything coming out of my account, I verify personally with that person because I don't know specifically what they've done to verify wiring instructions, whether they followed the protocol, because inevitably your professional liability carrier is not going to ask not what the other attorneys did in the transaction. They're going to ask you, the insured, what did you do? And you don't want to tell them that you relied on information provided by somebody else. You want to be able to say, no, I independently verified the wiring instructions before sending anything out.
I just had one other question so far, and it was, is it ethical to represent both the purchaser and the lender?
Um, it's not a violation of the rules. However, you do need to get informed consent. So if that's the case, you would want to make sure that that is um, in the retainer agreement. And of course, if there's any conflict that does come up in those, where you're representing both sides and negotiating with yourself, that's a red flag, or that will tell you that you have to withdraw from that representation. But it's not a per se violation of the rules. There are certain steps that you can take which will permit that.
All right. I do have one more quick question before we wrap up. Oh, two more. Well, so the first one is Should retainers go into your IOLA account first and then be transferred to your attorney operating when earned, or do you simply deposit the retainer into your operating account?
Um, Retainer agreements, I, so you're saying the retainer, if a retainer is paid ahead of time, I'm assuming?
Right. Should it go into your IOLA first and then transferred once you've earned the funds, or do you simply deposit the retainers into your operating account?
No, it would go in your IOLA account, and when it's earned, you do take that out. In fact, you have to promptly um, uh, take that out once those fees are earned. So yeah, you would not want to put it directly into an operating account if it hasn't been earned.
I have one last question. If your client, an individual, states that they own a majority interest in an entity, can you rely on the client's representation, or should you get verification from the actual entity?
Well, you're going to want to review all the formation documents, including the operating agreement. I like to look at the entire kit, which will include the membership certificates, and independently verify that the information provided to you is accurate. Sometimes I even ask them to provide a letter from the accountant, because of course they know who the members are because they're the one that's filing the tax returns. Look at the K-1 schedule to tax returns, which will identify the members. I'm not going to just rely on one person. That's an ethical pitfall right there because uh, you're not even sure if they are a majority member unless you have an accurate operating agreement. And if you're able to verify the members in accordance with what's reflected in the formation documents, including the operating agreement, you have comfort there to know that all the members that are signing and authorizing this particular person in the real estate transaction. So just make sure essentially to review all of those documents and then make a decision based on that.
Great. Those were all our questions for now. If you have any questions you didn't ask and you think of anything, you could always email Russ or myself, and we'll make sure that those questions get answered. Thank you, Russ, for a wonderful CLE. It's always a pleasure.
Thank you.
Just a reminder, after this, this afternoon, I'm going to send everyone all the material, and I'll also send everyone that FinCEN sheet that Richard showed earlier in the lecture. So have a great afternoon, everyone, and we will see you in December.